Long-time members of the community of the CTKS Global family know the price is always moving in a wave. It's always going down and then up and down and up. It's not an elevator, it's like the ocean. Unfortunately, many people think that price is just either down or it's up. They don't take into account that price is always moving in a wave. That's why we have a rule for price moves in waves. That rule is Rule 4, and it's a very important rule. In the last video, we were here around 96,194 as the price came into overhead structural resistance around that 97,174. The key level for us to watch was the 95,781 level. What happened to price next? It came down and touched the lower structural support level and then rallied above the structural resistance level. It managed to hold that level and it's been grinding up through this positive CTKS gap. Positive CTKS gaps can witness explosive price action. The key here to understand, if it's not going below, it's going above. If it goes below, it's going to the next level of structure. Price may be moving in a wave, but it's moving in a structurally bound manner. And what do we see right at the current time? Bitcoin is currently 101,391. It's moved up through a level of structure. This 99,934 level is now the level to watch. If we start to turn that into resistance, in other words, if the bears take over, we could find ourselves back at 97,180. If we manage to get above the 102,084, we're going higher, and it would be likely to hit the 104,185. But the real question is, what changed things inside the crypto market? The cheat sheet, did it give us any value whatsoever? Inside row 1 of the cheat sheet, we look at the VIX, the DXY, dollar yen, the 10-year, the 2-year, and oil. What did we see with the VIX? And the VIX is the thing that we've got the most attention on at the current time. It retraced. What did it do to Bitcoin? And why is Bitcoin, this blue line, going down? Didn't it go up? This is the inverted Bitcoin. And we can see on average, there's a quite negative directional association between Bitcoin and the row 1s. Not all the time, but when we view out, we get a much better idea. But as the VIX actually came down, and we said this could happen as the S&P 500 came into structural support, so we'll look at that in a minute. But if I flip this back and uninvert the scale, you can see what I was basically talking about here. As the VIX came down, what happened to Bitcoin and crypto? It went up. This is normal price behavior. I mentioned in the last video that the S&P 500 was coming into structural support and we may get a bounce through. And therefore, Bitcoin and crypto and the stock market could do very, very well. This is why we must understand the structural levels and where they exist on the price charts. So if I pop on the indicator, what we can see down here around that 6027 mark was a very high level of structural support. It absolutely bounded through this positive CTKS gap. And where did it stop out? The 6088 mark. And we know that's been a level of structural resistance in the past. These structural indicators allow us to look rightwards, not backwards, but rightwards. You already have the levels on the charts that you need in terms of resistance and support. All you need to do is to use the cheat sheet to figure out where things could be going. And the way to do that is to stack probabilities. And of course, the VIX gains its weakness or power from the S&P 500. So the fact that we came into structural support was a really good thing after coming in through this negative CTKS gap. The blue line here is Bitcoin, and you can see how Bitcoin and the stock market are intercorrelated and interconnected. In order to understand where Bitcoin's price is going, we can't just look at Bitcoin, we have to stack probabilities. You remember in the last trading session, the S&P 500 bounded up to that structural overhead resistance, and it's retraced slightly. Now what we're looking at here are the futures. You can see the futures have been rejecting that structural resistance level. But remember, price is always moving in a way. If the bulls gain control, they need to confirm this 102.084 as structural support in order to get up to the 104.185 level. We saw in yesterday's video, and I did mention it, 95.786 and 97.180 were the two key levels that you needed to look at. Right now, we have two more key levels that you need to keep your eye on. Price momentum above and sustained price momentum above the 102.084 is very bullish. Very bearish action would be a loss of the 99.934 level. One thing to be aware of, getting up to the 104.185 level could be rather problematic because there is a lot of overhead structural resistance here. Looking backwards in time, we've been here many times before. This 104.185 level is a problematic level, and the last time we got up here, we came down literally to the 93.707. A lot of people just say, Ken, I want to know where price is going to the ping. Okay, it's really simple. It's going to a structural support level or a structural resistance level. You've got the ping. This is why, as a community, we do something pretty special, we Borsog, which is buy on red and sell on green. It is incredibly profitable. There's nothing wrong with being an investor provided you don't buy at the wrong times and sell at the wrong times. I'd like to thank the very kind people who reached out and bought me a coffee on buymeacoffee.com. Crypto Turtle said, the CTKS Masterclass positively changed my life. I have learned the skills for life in trading and living with positive excellence. Congratulations, my friend. And thank you very much to Purpuratum. Purpuratum is the BKTY man, and he is awesome. What is that? Be kind to yourself and also, of course, be kind to others. I wanted to give you a little bit of insight into the put-call ratio. The put-call ratio is an interesting animal, and here I've inverted the PCC. What you'll notice is these long spikes tend to dictate where the market is selling down and selling down heavily. What I've also done is I've put the golden cross and the death crosses in here. This one is a death cross and this one is a golden cross. This is on Bitcoin's price history. Now, what does it mean for the PCC at the current levels? And a lot of people talk about the put-call ratio. Here, I've just inverted the PCC to make it a little bit easier to understand. The PCC, or the put-call ratio, is a financial indicator used to gauge the market sentiment and potential market direction. It's comparing volume of put options traded to the volume of call options traded, typically over a single day. It's really not hard to see when the PCC is really high, that is really bearish, and when it's really low, that is really good. That's bullish. I had a really good question. How do you know when to invert a chart? For example, is this following Bitcoin? So it depends on what the focus of your chart is. In this case, it's Bitcoin, and we're comparing it to the PCC. If we invert the PCC, we start to get a reasonably reliable signal as to when different things are happening inside the market. This is when you invert something. Now, what have we noticed here? Well, we notice here that death crosses and golden crosses occur at different times inside the market. Also, what I've got here, and this will be released in the Profiting from CTKS Method course, this is a capitulation indicator. It just lets you know when capitulation is occurring and when potential tops are occurring. So, if it started to turn red or started to turn green, don't forget there is a bit of time to go in terms of this indicator. AKA, don't freak out. Now, how do we use this knowledge of the put-call ratio to understand where Bitcoin is and could be going? We can see that the PCC is up around this level, so if we just draw it back, we can see across time there's more space that the PCC could actually go down because we've inverted it. So if we look at it from that perspective, let me just uninvert it for a second. A lot of people have a tremendous amount of trouble just thinking about inversion, and that's fair. As statisticians, we're taught how to look at mathematical charts, but the vast majority of people are a little bit uncomfortable with maths. Please don't be. Maths is awesome. So we do have the potential to come down to lower levels, and it's at these lower levels that things tend to get really interesting inside markets. Okay, let's just get a consistently reliable signal, and MC students, masterclass students, you'll know what I'm talking about. Getting consistently reliable signals is really important. And thank you to everybody for the many happy birthday wishes from yesterday. Very kind of you. It's a really good idea to get used to inverting charts. Inversion of charts is a very, very powerful methodology that you can use. When we look at the CTKS capitulation index, do we see any capitulation to the upside? Any green bars? Not yet. Do we see any capitulation to the downside? Not yet. And we've had a death cross and a golden cross, death cross, golden cross, so we could see more upside to this. But just don't forget, price is always moving in a wave. Everybody just considers it can only go up. Well, that's true, that things can go up, but they can also wick down, and when they wick down, it can be brutal. And we know this depends on what's happening with the VIX. Let's have a bit of fun. Let's add the VIX in. And of course, this is not going to help us because as the VIX goes up, what happens? Capitulation. The VIX goes up, capitulation. Now, what does that mean? If the VIX is spiking, Bitcoin, well, entirety of the stock market as well, is coming down. So this is not a consistently reliable signal. We need to invert the scale. Ah, that's better. So what do we see here? It's coming down and this is capitulation. Whoa, baby, it came down there. That was C19. And we've seen just recently the Japanese carry trade had its fun. Now, what are we seeing with the VIX? The inverted VIX is moving up. What is the real VIX doing? It's moving down. Now, are we seeing any downward spikes? Not yet. We are going to see them at some stage, and you need to prepare yourself for it. And we're also going to see blow-off tops at some stage. You need to prepare yourself for that. How do you know which is which? Structure will always guide you. And remember, we cannot just look at Bitcoin and say we know where Bitcoin is going. It doesn't work that way. All markets are intercorrelated and interconnected. The PCC has its part to play in stacking of probabilities. The VIX and the SPX or the S&P 500, they have their part to play. The row 1s, the row 2s, the row 3s, all the way up to the row 7s, they all have a part to play in the orchestra that is price. This was a specific community request to go into the PCC in a little more depth. I hope that's helped. And please let me know if there are other things that you would like me to go through. I'm very happy to do that. What is the conclusion out of all of this? Bitcoin could absolutely be on its banana run. In other words, it could go bananas, but we don't FOMO into anything. Price is always moving in a wave and it's always structurally bound. And also, you can have an investment portfolio and a trading portfolio, which I agree that is a really good way to go. Because if price comes down, you have dry powder to trade. If price goes up, you have an investment bag that's just there collecting. But if you see the market undergoing severe weakness, you can do something about cashing out your investments. Or at least creating a little bit of cash so that you could buy the dip. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.